Welcome to the Riskwiser Zone. I'm your host, Lewis, and we're glad you're joining us today. We've got an exciting show lined up for you, packed with the latest news and insights from the world of technology and finance. We're kicking off today's episode with a look at the upcoming Apple event, which is just around the corner. The tech giant is expected to unveil its new iPhone models, as well as other products like the Apple Watch Series 11 and AirPods Pro 3. According to reports, the new iPhone lineup will feature significant upgrades, including improved cameras, faster processors, and enhanced battery life. But that's not all. We're also hearing rumors of a new iPhone Air model, which could potentially be a more affordable option for consumers. And with the recent leaks suggesting a possible lower battery capacity for this device, it'll be interesting to see how Apple balances price and performance. In addition to the iPhones, Apple is expected to announce updates to its Apple Watch lineup, including a new Ultra model with 5G capabilities and a faster processor. The company may also introduce new features like satellite texting and improved fitness tracking. We're also keeping an eye on the rumors surrounding the AirPods Pro 3, which could feature biometric sensors like heart rate monitoring and temperature sensing. And with live translation potentially in the works, these earbuds could become even more appealing to consumers. Now, we know some of you might be thinking, what about Apple's AI efforts? Well, according to Mark Gurman's latest report, it seems that Apple is working on an AI search product that will launch alongside its revamped Siri, but that won't be happening until March. As always, we'll be keeping a close eye on these developments and bringing you the latest updates as more information becomes available. And remember, when it comes to investing in tech stocks, it's essential to stay informed and adapt to changing market conditions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest developments in the world of finance and risk management. In our previous segment, we explored some of the key trends shaping the industry. Now, let's take a closer look at how recent events are impacting specific companies and sectors. We've got two interesting stories to share with you today. Firstly, there's been a significant development in the Indian real estate market. The government's decision to cut GST rates has sparked hopes of a revival in housing demand, particularly in the affordable segment. According to experts, this move could lead to increased sales and improved profitability for builders. Mohit, our resident expert, joins me now to break down the implications of this policy change. Mohit, that's right, Lewis. The GST rate cut is expected to reduce the cost of construction materials, making it more viable for developers to build affordable housing projects. This, in turn, could lead to a surge in demand, especially with the festive season approaching. However, it's essential to note that the real estate market is also influenced by other factors, such as interest rates, land prices, and regulatory approvals. Lewis, absolutely. It's crucial to consider the broader context when evaluating the potential impact of policy changes. And speaking of significant developments, our second story takes us to the world of energy and power. Adani Power has announced a major international project deal with Bhutan's state-owned Druk Green Power Corp to set up a 570 MW hydroelectric project. This move marks a significant step in Adani Power's expansion plans and reinforces its commitment to clean energy. Mohit, that's right, Lewis. The agreement between Adani Power and DGPC is a notable development in the renewable energy space. As countries around the world transition towards cleaner sources of energy, companies like Adani Power are well positioned to capitalize on this trend. The project is expected to not only generate power, but also create jobs and stimulate local economic growth. Lewis, indeed, it's heartening to see companies investing in sustainable initiatives that can have a positive impact on both the environment and local communities. As we continue to navigate the complexities of risk management, it's essential to stay informed about these developments and their potential implications for businesses and investors alike. And that's all for this segment of the Riskwiser Zone. We'll be back with more insights and analysis after a short break. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the closing segment of the Riskwiser Zone. Today, we've got a fascinating story from Japan that highlights the ever-changing landscape of global markets. Just days after Japanese Prime Minister Shigeru Ishiba announced his resignation, the Nikkei 225 stock index has hit a record high, breaking the 44,000 mark for the first time in history. Now, you might be wondering what's driving this surge in the Japanese market. Well, it seems that despite some global economic uncertainty, Japan's economy is holding up relatively well. In fact, the country's stocks have been on a tear lately, with the Nikkei 225 reaching new highs 5 times this year alone. But here's the thing, not everything is rosy in Japan. Consumers are facing hidden inflation, also known as shrinkflation, where prices are rising but package sizes are getting smaller. This has led to a surge in popularity for grassroots websites that track price increases and product downsizing. One such website, NIIJJP, is getting around 2,000 visits per day from people seeking pricing and product data. The site's creator, Masayuki Iwasa, was inspired to start the project after noticing his favorite chocolate bars were getting shorter. It just goes to show that even in a world of high-tech investing, old-fashioned consumer vigilance is still essential. Now, I know some of you might be thinking, Lewis, what does this mean for my investment portfolio? Well, as always, it's crucial to stay informed and adapt to changing market conditions. Japan's economy is complex, and while the Nikkei 225's record high is certainly a positive sign, we must also consider the potential risks of hidden inflation and its impact on consumer spending. As we wrap up today's episode, I want to leave you with a word of caution. In times of market volatility, it's essential to stay level-headed and avoid making impulsive investment decisions. Remember, investing is a long-term game, and it's crucial to prioritize prudence over speculation. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.